that can come from open account trading and how they actually, but obviously the risk mitigation, how do you actually mitigate against that risk? And as we get into things like deep tier and all the rest, so that's exactly. So I think banks are obviously kind of caught in a position whereby, yes.
How banks actually really think is that the sharing of information is what's going to help mitigate that risk, right? And being able to share that information for those small vendors, those SMEs, in a real-time type of a situation allows you, the bank, to look into something that they didn't have before, not because they had the information, but because maybe their competitor had the information, but they're willing to share it to make the entire industry better. And I think that's a mindset that blockchain tends to kind of, promote, basically, by everyone being able to share. The sharing part of that is the huge part. It's like banks can't be in these silos and think that they're going to overcome these problems by themselves without getting information that is readily available to all the banks, right? So.
And Lamar, as the only startup in the group, have you found banks very receptive to your ability to help them share?
Yes, there are some banks that are progressive, I would say, but to a bank instead of to a person. To a bank, I think most banks are still very risk averse, and I think it just comes from the fact that they're holding our money, right? And which you kind of want the people that are holding your money to be a bit risk averse. But when it comes to just information, and not necessarily around value of things, but just information, to say that this supplier, this supplier has you validated this supplier's invoice, right? And now you know this invoice is real, and you tell everyone this invoice is real and that we already have it, right? We've already bought this invoice, so that same supplier can't go out and try to sell it to the Bank of Ireland and try to sell it. This supplier has you validated this supplier's invoice, right? And now you know this invoice is real, and you tell everyone this invoice is real and that we already have it, right? We've already bought this invoice, so that same supplier can't go out and try to sell it to the Bank of Ireland and try to sell it to Credit Agricole. But just that little bit of information, right? Just that little piece of information stops a lot of the fraud related to that supplier, right? So it's that kind of thing that I think banks will start opening their minds up.
The second one, I think, is the overall operating model. Like who operates this marketplace? Who are the participants in it? There are differing models in whether you want it as a utility, which can save costs for the industry, or you actually have dominant corridors with players who want to gain competitive advantage from it. I don't think that question has been solved, and it's not a straight question of just business model. It also speaks to competitiveness, the individual regulations of each market, which kind of preclude some of that.
So what you're talking about is how do we get to the normalizing of a digital signature, and how is that digital signature, which is established on a blockchain, how does that become accepted as the norm?
Yes, one part of that, but there's also the other. There is a lot of players in this ecosystem, and everybody needs to have their part of the data that they need. And I cannot imagine one single trade network dominating the world. It is just too big. Like there will be multiple ones of this, how they interoperate, how they share data. You talked about payment and the trade. How does the trade network connect into the payment network? Like all of those are questions which are incredibly important, and I believe the community at large has started to work on those, which is a great progress.
And you bring up something really, really cool when you were talking about coming to a standard, a legal standard around all of this. With the different governments of the world, I don't know if we'll ever come to one standard. And so our approach has been to take the legal environment that these entities are already working in, right? Say there's a bank that already has a supply chain finance program. They already have a legal framework for themselves. What we want to do is get down to the core of it and say, okay, you have that legal framework, you have a port on our platform. So you have this port, you run the rules, you have all the legal framework around it, and then that becomes an asset that at the protocol level can be traded, right? And then people have to accept your legal framework if they want to trade at your port. It's very similar to what the actual ports on the waterways are now. So the mindset is not to try to come to one legal framework, but to allow people to establish their framework, but then at the protocol level be a network, right? At the digitization and tokenization level be a network. And I think that's the way you can kind of move forward, right?
So integrating tokenization and that digital part of signature into the regular negotiation of a contract, and the regular deployment of a contract.
Yeah, that you already have that framework. It's just about, okay, instead of having this pen signature. Now you're starting to accept in your framework that you've had for the last 20 years, you're starting to accept digital signatures. And then that takes you to the point where if you're accepting a digital signature, now you have this PKI, this public key index or public key interface, where now you know I have your public key, and now we can use that now to trade the asset. So we got the digital signature for the contract. Now we can do it for the asset as well. So.
And I think just to add on to what both of them said, so I think there is that recognition, hey, there is a new technology, we can do that. But there's just not nearly enough work being done to figure out how do the set of companies come together and do this? Because there's a lot of nitty-gritty detail into what data you put on ledger, what you put off ledger, what is shared. There's no legal guideline around confidentiality of data shared. So, in terms of, who gets to see what data. Without knowing that, they're afraid to take that step about, how do I do need quick wins if I have to stand up something like this. Nobody is going to create new products and services around, something like this. This is going to be a channel. So how do I stand it up in a way where I know there are going to be some bumps? Let's stand up the thing, start sharing data that is meaningful, get the process more efficient. I think it is not serving the industry as a whole good to just keep talking about things work, to your point. The technology works, but you need the infrastructure, you need adoption. So if you don't have people adopting and being parts of these networks, how do you get these things to work?
So it's not just a question of, it's one thing if Foxconn is able to do it within its own partners because it's very vertical, and it's one thing if the Bank of Ireland can do it amongst as a test.
Correct.
But it's quite another if Foxconn is using the Bank of Ireland through Hydro and
they
another
have to
party
be on
is
the
joining.
same network, and that has to integrate with their legacy, like it or not. They're not going to be able to wish away your legacy. You have to integrate, and you can't just do this. And I think just approaching it with a very technology solution, you have to get a much bigger. It's a much bigger change in the broader organization level. So executives may feel that, hey, this is a great technology. That view may not be shared by people who have to go and implement these systems. So why don't we all do the work that is needed to bring these systems to life? And we are going to run into, it is not going to be easy for firms that compete with each other to start, cooperating. Let's realize that there is going to be that challenge. Let's talk about those more openly, and then we talk about taking these solutions live.
Trust among competitors being a problem that needs to be solved in this for it to take the next steps.
Correct. And then you have to sort of get comfortable with that paradigm, right? So you're competing, and suddenly you have to collaborate. Now, easier said than done.
Well, we already have that in the banking sector. So we have, well, certainly in the European Union, we have PSD2. So from early next year, we have required to actually open access to third parties with customer consent. So, and this is just, PSD2 is just a stepping stone to what is a broader kind of open banking framework. So even though, open banking and blockchain and AI, they all seem like separate disciplines and separate activities, they are all part of the same open architecture, open future. And you have to collaborate. So, and you have to open your data. So it's that kind of paradigm, hidden, security without privacy, or, that's the future we're going to inhabit for all sorts of regulatory, technical, economical reasons.
And how do you grow to large networks, right? Started at Harvard, and that was a small network that connected to a network that is Stanford, that connected to a network that is Princeton. And so I think in that example you gave, if these two companies are working together, they already trust each other. They've been doing it for the last 20 years. Use that network and then allow someone else to have the network. But I guarantee Foxconn is probably in several banks' networks, right? And so they become the connector that connects all the networks.
I think, you made a good point. Currently we have a different approach. Although before we talked to some bank before, but we know it's hard, even like Citibank, the kind of, I think number one in Asia for doing the trade finance. However, I talked to them, they say, yes, for Foxconn's direct supplier, most likely they can finance. However, for the upper tiers, the tier 2 supplier, they can finance part of that under the condition of at least 30% guarantee with cash. So then for the third tier, impossible. Wow. Therefore, we realized this problem a year ago, and then that's why we decided to launch chain finance, as I just mentioned. Because we want to use the chain finance as an independent company, we use Foxconn's upstream supply chain. We want to do the deep tier financing for them. Okay, so therefore we can hook in the data of Foxconn's payment data, procurement data with the direct supplier data, level 1 supplier data, and also have the level 1 supplier invite the level 2 and the level 3, and then they can all be, this payment data will be written, the account payable from Foxconn will be written, let's say, pay in 90 days. And then they need a working capital, they can get the financing from the chain finance. Or they can pass through, they can divide the payment, let's say 1 million payment, they can divide it as many as they like to pass through the tier 2 supplier, as many as they like. And also tier 2 can do the same thing in the system, in the blockchain system, pass to tier 3, tier 4. Therefore, we found, because the problem in China now for the SME is 85% of the SME is unable to get finance. They have to go do the shadow banking, they have to go do other financing factory, but in a long time, let's say maybe 3 weeks from bank. So it's very inefficient and very costly, especially for the upper tier, smaller supplier. So therefore, we create the chain finance, the company. We use Foxconn supply chain as the first trial, to invite more and more, maybe hundreds of the supplier of the upper tier. And later, we will use this case as to show to other co-enterprise, like say Huawei, like even General Motors, for other industry.
Lead the way for the other ones that have these complicated
That's why we
networks.
think it will be easier, and however, we still will invite the bank, to join us to provide the financing for chain finance.
Right. Just to add to that, right? So
Yes.
it's important that the banks are kind of collaborating to build this, because
Yes.
if you don't see both sides of the transaction,
Yes.
and it doesn't need to be blockchain, right?
No.
So if you look at India, they came up with the TREDS, the trade receivable discounting system. The government decided, hey, the SMEs are getting a raw deal. Let's give them a system by which they're able to discount their invoices.
Yes,
so
yes.
it's not that it's blockchain. It's more about what is the problem, right?
Yes.
And if you have a lot of banks collaborating to kind of stand up a solution, the chance of adoption is higher.
Yep.
And then you have better chance of it succeeding as a solution.
Yes.
Otherwise, there's no lack of existing solutions or attempts to digitize, right? It's about adoption.
Exactly what you say. The role of a chain finance to create this platform is to validate the invoice and the payment, and then to make it a very good quality of asset. And then either commercial bank or the P2P, marketplace lending, they can bid for the asset.
And
right?
Jack,
and then provide the financing to the.
You were saying that it's the third tier that's having trouble getting the financing. How deep do your tiers go?
We did some study. We already done some pilot case up to third tier. It's no problem. They're happy. Yeah. But we studied the tier. It can be up to 8 tiers.
8 tiers.
Yes.
You go to 8 tiers. Wow.
Yes. Yeah, well, we try as many as possible. Yeah. Let's see, in the coming months, because the company just founded, well-founded last month, and then it's launched, it's hiring people. Yeah, so we are going to do more cases.
So in your typical company, you've got a trade finance division and you've got a supply chain management division. And now that we're seeing that money can move a little easier, we're starting to see the goods enter the same rails, the same lines of communication as the money. The two divisions are kind of coming together. And money has moved some pretty interesting things this year. I know the Bank of Ireland moved some interesting stuff over the summer.
And I would say, but I would take a look at what the kind of things that are happening, certainly in the Irish market. I think it was just back to even to the point there. So I know our competitor Barclays, not in the same market, and the Irish Dairy Board and FinTech Wave, they did their first transaction there. And I think what's interesting there is that the money still moved via SWIFT. So fundamentally, what we believe is that, while we still have SWIFT is actually is pretty good, and that actually the
Other
future.
than the big hack.
Yeah, the future is pretty much around a digital native currency. That so you to get that consensus mechanism, you still. So I won't say Bitcoin because banks don't like to say that, but reality is you need a digital native currency in an open permissionless platform. That be the future. In the meantime, we could do what we're still good at, which is and if I look at the Irish marketplace, the kind of things that we're looking at are very much around where we need good transparency and where we have, so that can be equine, it can be, so where you've got very kind of fragmented value chains, but also where provenance is also required. And that's something that as an export-led country where we deal a lot in produce, we deal a lot in livestock and whatnot. So I would look to more of those areas as the areas that we're focusing on, where we can actually help. Because remember, it's not just about the bank helping itself, it's about how as well we have a mandate at government level to help companies, corporations actually do business and to ease the trade flows.
Mitigating the damage from a recall of a cow raised.
Absolutely, that would be, and this is exactly the point. So there would be systemic issue in the Irish marketplace, or in many, New Zealand would be the same way or whatnot, if suddenly we had a BSE or crisis or something like that occur again. So increasingly the pressure is not from within to innovate. And remember, the focus of our innovation is not the technology here, it's actually the business and operational models that surround it. It's actually more about how we can help our customers and the country. And with 50% of the business and corporate lending flows in the country, that is the country.
And that's why we've seen luxury brands sort of grabbing hold of this right away, because they're able to take advantage of this provenance. Do you have has Deloitte seen a lot of that?
Yeah, I think like the interesting pieces that come to mind is art.
Yeah.
Like a big art market. We've been active with auction houses, with governments who are responsible for driving art in the market, and like provenance there plays a large role, not only for the value of the actual art, but also in the parts that are connected, insurance on the art, and all the connected processes. And that's just one part which probably when you go in and start talking blockchain, you wouldn't naturally think of that. But art is one. I think we've seen a lot of activity, like I'm Canadian, so like in the commodities side, like what you do with potash and some of those commodities that actually span the world and are distributed right from the part of exploration to the end point. And the other one I wanted to say is it's not, like we talk about merchandise all the time, which is physical goods, but we're getting into the part of digital delivery as well. Like you guys have seen what Spotify is doing with MediaChain and the announcement there. It's digital delivery of goods, which is not financed or not goes through the normal ways. But in that context of moving digital goods, I think we're increasingly seeing a role with the Spotify announcement, specifically on attribution, on rights management, and how you track that through from the part of creation to the listener, and then connect payments and all those connected stuff around it. So those I think are very interesting places where the technology.
So you mentioned insurance entering that dialogue of money flowing with goods in this case. Lamar, do you see that in your platform? Do you have that ability to integrate not only just moving trade finance when you're moving your goods in your supply chain, but is insurance already a part of that?
Yeah, so we're working with a company called Euler Hermes. They're the largest provider of trade credit in the world. And they have a particular thing called single invoice. And so when you break down these assets into one digital asset, you can literally put insurance on the one asset and not necessarily on the entire book of those assets, right? Which makes it a lot more efficient and allows you to make credit decisions based on that asset and not have to worry about, going in and doing the entire book, right? And I think those types of things, and I think that's where with technology, that's where we can go, right? Like there's all of these different things, fintech and even Spotify or whatever, that we can bring. I don't know how Spotify would work, but APIs that you can bring into these platforms really easily and expand the platform and add things that haven't been added before, and to innovate in a space that for 200 years really hasn't had a lot of innovation, right? I mean, all the way back to the Medicis, right? It's like it hasn't really had a lot of innovation. And so because you digitize these things, I really believe there's going to be a lot more innovation in thinking-wise, because you can add pieces that all of these entities are starting to build APIs that make it easy for the different programs to communicate.
And when you integrated insurance, you had that eureka moment? You realized that
it's
it wasn't just going to be...
It's not just trading the asset, it's putting insurance against the asset, right? And I'm telling you, there are things that we probably haven't even thought of that someone else will see in the marketplace and say, you know what, we can build a nice API for that taps into another old industry and then add that directly into the
This is
platform.
where we see in fintech. So, where we have these, we'll say, everybody kind of looks and says these hackathons and all the rest. But it's actually standing up, because certainly in Europe we have to stand up APIs by next January, mandatory requirement. But that it's only where you actually bring in those externals, fintechs and whatnot, that suddenly the propagation of ideas. We can never imagine, we will never innovate as fast as our customers. We will never think of the ways that they will use APIs. But all we can do is actually provide the pipes, really focus, double down on the security, and that's really important. And some of the ways we kind of look to do that kind of security is certainly using, DLT and blockchain type, or at least inspired, scenarios, technologies. But yeah, so API platform. My job is to disappear blockchain over the next number of years, so that to the point where nobody talks about it anymore.
Right. Yes.
So success for me is where you disappear it completely, in much the same way as with any other aspect. What's interesting is that whenever we actually sit down and talk with our enterprise architects and whatnot, and once you explain what this is, they go, "Oh yeah, that's okay, we understand that." And they do, because once you rationalize it, we tend to over-engineer, what this is about. At European level, I sit in the European Banking Federation blockchain workforce, and everybody sitting around that table has their own use case and whatnot. That's not the focus of attention. The focus of the attention is how do we lobby and how do we talk to regulators and national bodies. And the reality is then, I think last year we sat down with the German, we talked with the German regulator, and they said, nobody's actually presented to me exactly what it is you want to have regulated. And in the UK, it's pretty much the same way. So I think that we need to stop the focus on the technology. The technology exists there, and I think that we need to understand we're in an open, collaborative kind of world, and just get the stuff out there. And in terms of that legislation and the legal frameworks and whatnot, they're the inconvenient truths, and we need to double down on those things to make it happen.
And from a bank perspective, I mean, now that we're seeing that it's becoming so much easier to move money and that it's being tied to goods, and we've seen some of the provenance stuff and the ability to charge a luxury price, will we see this uptake happen? Will we see people use it because a trade financier can now fulfill ethical consumption habits of buyers? Is that one of the ways that this is going to penetrate the market and become normalized, that the trade financier is now able to satisfy not just moving the money, but to a greater extent, the much more sophisticated consumption habits of people these days?
Yeah, the provenance. So we've done this pilot, for 3D printing. If you look at 3D printing, it's the IP. It's a very valuable digital asset. You want to make sure that it's printed authentically and that, the right 3D printers and the suppliers, the industrials are all collaborating. So the critical thing is to be able to get all of them, and this is what we are now in the process of developing, that ecosystem, where you create that ecosystem of the 3D printers, the service providers. You have to get the industrials in, you have to get, so if you want seamless manufacturing, so this is a good example of where, you want to make sure that the designer gets compensated. You don't want fake versions of, because it's the IP is in the file. So that's a real good use case because it's not encumbered by legacy. You don't have to go change something. This is a digital asset. So how do we create provenance? How do we create data around it? And over time, other use cases will emerge. The data exists around it to, as to the manufacturing history and all of that, and then you're able to do supply chain finance. But the critical work is to get the ecosystem together, get the participants together, because otherwise you can keep doing experiments and nobody will care after a couple of years.
So Lamar, what do you think about just that idea of motivating the trade financier? Do you see that in your business when the bankers and you're working with them? Do they come and say, well, I want to make sure that the stuff I'm financing for my clients meets the standards that they are expecting?
We haven't really hit that yet, right? Yeah. I know that we had another group that was up here with us before that was more about the physical supply chain. Yeah. Like I said, once again, we are more so focused on open account and invoices that we really haven't hit that point yet, right? We don't track the entire supply chain all the way back to the root of the tree, right? We don't go there. So we really haven't had that, but I can see how provenance is definitely something that has to be taken into consideration. And again, a shared information network blockchain, right? That's a perfect place to bring this technology, is to track this information, because all it takes is for someone to hit something on their cellular phone to say, hey, this is the point of origin. Here's the GPS. This is where we got it from. It was shipped from this person, and their digital signature signed it, right? That is very powerful, and it's small but yet powerful. Very powerful.
And that you mentioned that, and that will be the final point of this panel. And I think it would be a good question for Jack. You know, we're seeing machines becoming integrated into our contractual relationships, and know your machine is coming, and we have to know our machine. It's got to take legal responsibility for the contracts it's going to sign.
Yep.
Is Foxconn paying attention to that?
Actually, 2 days ago, I was just attending Trusted IoT Alliance. We are also the founding member of that's also sponsored by Cisco and a few startups. We see why we are doing from the financing first is because we want to solve those painful problems of the SME, because they need the money, they need the working capital. However, eventually we think the most important is for the tracking, for the provenance, for tracking the flow of goods, and then the information, the procurement. Therefore, we pay quite high attention to how to track the goods in the supply chain, how to make it, with the smart contract and the procurement system, how to integrate those systems together, all in the blockchain, together with the money flow, with the financing. Yeah, so we pay quite a lot of attention on the IoT thing. Yeah.
Well, thanks so much for your patience and attention, and thank our wonderful panelists here for their insight and their time.
Thank you.
Thank you.